Hello, everybody. So I just wanted to do a brief overview of the market. So starting with the S&P 500 SPY, I'm going to zoom in here. I want to take out these moving averages real quick. And if you watched the last video, then not much has changed other than this right here. So now when we're looking at this, we can see that we're in this clear downtrend. And we've been in this downtrend since, let's see, basically the beginning of the year. So we have this high right here, we have this lower high, and now we're starting to build another lower high right here. So the question is, where does this actually close and where do we reverse? So there's a lot of people speculating on this, but I do want to give you some insight. So if we zoom out to the 5-year, now what I see on this 5-year chart is I see this right here. I see the shoulder that's being built out, this left shoulder, this head, and now we're building out something that looks like a right shoulder. So if I'm thinking that this correction actually gets a little bit worse, my thoughts is that we could go all the way down here and close this right shoulder and just complete this head and shoulder movement before we make another move up. So let me just see. So if we close this out, that would be about 403. So what I want to do is I just want to calculate how much that would be off from the top. So we'll do 480 minus 403. Divide that by 480. And that's about a 16% correction if we fall all the way down to these lows. So where are we right now? We're basically at 430. So 480 minus 430. Oops. 480 minus 430. Divide that by 480. Right now we're at a 10.41% correction. So I just want to point that out to you guys. Now I'm going to go back to the 1-year. Going to introduce the moving averages. You can see we're still below the 200-day moving average. We were above the 250-day moving average at one point, but you can see that we tried to get back to that level, and then we just completely rejected. So where could we fall from here? I mean, if we continue falling, then I think we could probably go right down to 420. That wouldn't surprise me at all. But sometimes the market isn't that easy, and there's a bunch of whipsaw movement. So what could happen is that we could have like a close right around 428 and we stall out a little bit. And then we could actually make a little double top here. They could trick as many people as they want, make it look like we broke out of this trend channel, and then they could take it down. So a lot of things could happen. You could see something kind of similar happened right here. So you see that we bounced, we hit the top of this trend line, we fell. Now, I mean, a lot of people were probably getting puts, but then what happened? We rallied again, and basically everybody probably got screwed out of their puts because that's 444, which was the 200-day moving average, and then it went all the way up to 457. Now people here are maybe thinking, oh, I need to get calls, and maybe we could squeeze all the way to the top of this old trend channel, right around 463. Maybe we could get above this 50-day moving average. And then what happened? They took it down all the way to the 250-day moving average. So, I mean, these people are professionals at burning options premium. So they could definitely introduce some whipsaws. And, it doesn't have to be straight down all the way to 420. We could actually just stall out here for a little bit. Could go up again, and then they could take it down. Or who knows? Maybe this is the bottom. I mean, I'm not in the profession of calling a top or a bottom. I'm just saying that there could be a lot of whipsaw here. It doesn't have to go straight down or straight up. And what could very well likely happen is that they could be burning premium around here. And then they could trap more bulls into getting calls and then take it down. So, long story short, we have a lower high. and we're still underneath all the moving averages. So now I'm going to go into some different megacap stocks, starting with Apple. Now, yesterday we basically made it above the 100-day moving average, and if you look, what basically happened yesterday was that we fell sharply, and then we closed above the 100-day moving average. But what happened today is that we also fell sharply, and we actually gapped up all the way up here, and then we fell sharply. But near the very end of the trading day, we tried to reclaim that 100-day moving average. So you can see near the end of the trading day, we're basically here at around 162. Now we're at 163.20, but let me show you where that 100-day moving average is. So I'm sure a lot of people thought that the same thing was going to happen yesterday and that we'd make it back above the 100-day moving average, but see, check this out. 100-day moving average is at 163.37. We closed below that. So to me, that tells me that things are a little bit risky right now. You can also see this 50-day moving average curling under, so things don't look too good right now, in my opinion. Now let's go to Amazon. Now, if you look on Amazon, we're kind of below this 20-day moving average right now, and we tried making it above here, but got rejected. There's also this downtrend line. So if we do pop, I mean, it lines up with the 50-day moving average right here. So if we do pop, we're going to want to close above 3,150 and 87 cents to be looking a little bit more bullish on Amazon. But right now, zooming out, we've basically just been moving sideways in this channel right here. I guess it's not really sideways, but price action hasn't been doing too much over the last few years. We've been going in this trend channel, and then we recently broke out of it. So to me, if Amazon were to further sell off, what I would be really worried about is this gap fill right here around what is that, 2,461. So that's what I'd be worried about if we were to really start falling here. Now looking at Google, you can see that this 50-day moving average is curling under. So I would be a little bit worried if this goes underneath the 200-day moving average right here. And you can see right now our current price action, we're underneath the 20-day moving average. So things are looking a little hairy here. You can see that we recently broke out of this trend channel. We're respecting this down move right here. So we're respecting this downtrend. Now we might make it a little bit above here. We might get back to that 200-day moving average, but what we need to look for is do we get above that or do we reject it? And I also want to point out that double bottom again. It's right there. So if we break under here, then I would think that we're very likely to go into a strong correction or the beginning of a crash if we break this level right here. Because underneath here, there's not a whole lot of support. I mean, I would think that the next level would be possibly around here, which seems very weak. So right around 2,230. Let's make sure I got that right. Yeah, probably approximately around here. So I mean, things do look kind of risky. When you look at a stock like Google that's just been going straight up without really building a very strong support anywhere, on a crash, it could potentially fall quite a bit. Now Tesla's been moving in a very predictable pattern. So I know a lot of you have talked about wanting to buy Tesla, But let me just point this out for you. We've been in this trend channel for a while. We've been moving back and forth. We recently broke this trend channel. Now, to me, that's red flags. And then look at this current trend channel we're in. We're in this downtrend channel. And this downtrend channel, I'm not going to lie, is pretty darn spectacular. I mean, just look at this. So it catches this movement right here. It catches the top, catches the bottom, catches the top, catches the bottom, catches not quite the top. But you can see how when we broke underneath this trend channel, we really sold off. And we basically caught the bottom right there. Caught the bottom right here again. Now we're catching the top. So what do you think is going to happen? I mean, my guesses are we're going to fall. But I'm basing that guess based on all this previous data right here. Of course, I could be wrong. But pay attention to the 200-day moving average at 835 and some change. If we fall under that, things definitely get worse. And I do want to point out, if we do rally, there's this major resistance right here. You can see that this is where we first gapped up. We made that major gap up into that move in the thousands. And then once we broke down here, we had this massive sell-off. And then we're having resistance right here. So this level, which is, let me take out the moving averages, about 947, 948-ish. So moving on to Nvidia, I just want to point out that we've been in this channel, and this bottom trend line normally catches these massive sell-offs. So if Nvidia continues to sell off, I mean, this bottom trend line has us catching about, let's see, probably around 200. And then you can see that Nvidia doesn't have a whole lot of support. So we made this massive rally, and we haven't really drawn support in this area that much. So I would say that the strongest support in this recent price action is probably around 192. And let's introduce the moving day averages again. Where are we? Well, things look pretty risky right here. We're a few dollars away from the 200-day moving average. And you can see this recent price action is a lower high. So we have this high right here, this high right here, high right here, and now we're drawing out another lower high. Now XLF is probably a big reason why the SPY fell so much today. This is the financial sector, and we fell 3.69%. So when we're looking at the financial sector, what I'm noticing right away is that when I'm zooming out here, we're starting to curl down. You can just kind of see, look at the chart. It's drawing out this parabola and inverse parabola, so not a good one. And you can see that we've kind of been moving in this channel. Most of the price action has been in this channel. And when I go on the 1 year, you can see that current price action is below the 100 or 200-day moving average. And if we actually fall a little bit more, actually, never mind, it's below the 250-day moving average. So it's actually below all the major moving averages right now. Let me just zoom out as well. So when I zoom out to the max time frame, I can see this trend line right here is catching a lot of price action. So I would think that if we continue to fall here, we could find some good support right around this $95 area for XLF. Now, a lot of you guys might be scared and you might be running to gold thinking that this is a good idea. But I want to tell you that gold has some serious resistance right here at around 183.50. And you can see that right here in 2020 and again in 2021 that we rejected this area. I mean, what's the chances that we could go all the way up here? I mean, maybe if we break above this area, but I mean, you got to break above this area to even think about this. And gold has the full bull trend, looks very bullish, but things like gold can change pretty quick. People run to buy gold when there's a lot of uncertainty, but as soon as that uncertainty eases up, you can see quite some hard sell-offs. Like you'll notice right here, just that massive sell-off happened over the period of actually like a few days, really. This massive sell-off, that was just a few months, almost a year. So definitely be cautious with gold. You don't really want to be buying in these levels. If you're buying in these levels, right around like 160, then that's fine because it's been holding that up for quite a bit. But you don't want to be a buyer of gold in this area. And lastly, let's look at the VIX. So I did say yesterday that if we got over 31.79, things could get very ugly. So right now we're above 31.80. So we'll see where this goes. I mean, there is a potential possibility that we could retest this 37.83. But if we do see 37.83 on the VIX, you know what I'll be doing? I'll be going on the SPY and I'll be making sure I'm buying the SPY. So that's essentially my broad overview of the market, and I hope you guys enjoyed.